Hello everyone, my name is John Hyaden and we're starting another daily revision. Before we start, stop the video and read the general risk warning. It is very important for your knowledge to understand the risks under trading. Upcoming events. All events are taking place in GMT hours. I recommend you write the events down in your calendars so you would be able to trade and notice them before and after the announcement. Starting another trading week, the focus today will mainly be on the Eurozone, as Mario Draghi, the president of the European Central Bank, is speaking today. Unlike the other time in which Mario did not give any hints on possible moves, analysts now think his speech will focus on the quantitative easing and interest rate decision, which of course will influence strongly the euro today and other related pairs such as the pound, Swiss franc, and more. US market, Wall Street is going down. Last Friday, the S&P 500 finished lower by 1.12%, while the Nasdaq even worse by 1.89%. The speculation on the upcoming interest rate is still worrying every trader, as we can see it on the graph with big red candles, which represent mostly fear and uncertainty. Last week, the big indices dropped by almost 3.5%, making it the worst week since August. Will they recover? Using the technical analysis, we can see the S&P 500 future hasn't reached the support level. That for the short term, we are still heading downward to the 1,992 points level. If it will not stand the powerful sellers, then we should carefully plan a longer strategy for put options. As you can see in the graph below, this is the S&P 500 daily chart, and we are still facing downward, at least to the support level here I marked in yellow. So for the short term, put options will be a better advice. Commodities. Gold. If we overlook at the gold, we can see easily that sellers control the commodity. After a long rally downward, it doesn't seem like a good call option. However, since we are short-term traders and we need to focus on what's coming up next for the few hours or days, there are some positive things in the precious metal, starting with the idea Paris was under attack and still planning to attack. This affects the gold in a positive manner. And why is that? Always remember, when uncertainty or fear is in traders' mind, the gold benefits from it. Secondly, China poor results force the government to stimulate their economy with the easing plans, which of course are good for the gold, who loves weak economies, as traders tend to stick to the safe haven. In conclusion, short-term trades in favor with the buyers, until the next resistance can be a good advice for the gold. And you can see it here in the graph below. This is the last support area which broke down with this huge rally, and we're heading toward a small correction, which for the short term you see the gap between the green candle here and the yellow resistance. That's exactly the gap with which we can make money on call options. Commodities. Crude oil. After breaking the last support at $44 per barrel, the commodity is heading downward, making most analysts' prediction to fade away, as the entire world expected to see higher prices for the oil until the end of the year. Unfortunately, it not seem to happen, at least for the near future. Paris' attack on Syria did help the oil in today's early session, since Syria represents an Arab country with lots of oil, so traders believe the attack affected the supply of oil. But according to major analysts, we will not stop the global surplus of oil, and the prices should keep going down. And you can see it here in the graph below. This is the crude oil daily chart. We broke the $44 support area, which I marked here in yellow, and we're heading towards the next support level at 38.45. Forex. Trade of the week. The New Zealand dollar against the US dollar is preparing us a beautiful trade downward. The dollar, as we all know, is getting stronger due to the speculation for higher interest rate. This is the first sign for put options here. The second signal is that the New Zealand dollar, which is mainly affected by the gold, since most of New Zealand's income is from exporting metals, and as we all know that the gold is now showing signs of strength, therefore that's the second signal. Furthermore, using the technical analysis approach, we can see the graph is in favor with the sellers, who control the buyers with big red candles that represent sellers' strength. In conclusion, this graph is ready for another drop downward, even for a longer term. As you can see here in the graph below, there was a resistant support area here, that we broke with big heavy candles, and a trend line here, which at first it was acted as a support level, but we broke it down with this last big candle, and we are now and it now changed its role from support to resistance. Therefore, as we will break this small support over here, we should see another big drop downward. That's it for today. If you guys have any question, you can contact me on binaryoptionsreview@gmail.com. My name is John Hyaden, of course, and I suggest you visit Ken Davis' blog on binaryoptionsreviews.net to see further articles and revisions. See you again tomorrow.